Warm welcome to wherever you are in the world. I'm Andrew Tate, and I'm from Minds and Money. For those of you who don't know about the history of the Minds and Money show, we started the 5 at 5 show, which is 5 guests at 5 p.m. back in April 2020. We intended as a stopgap weekly 16-minute show, which would bring the industry together whilst we were dealing with lockdown and COVID-19. 20 months or so on, actually it's 24 months now now. We're now on episode 104. A few admin announcements before we start. To make it as interactive as possible, please have your video switched on. To ask a question, you've got a couple of options. You can either submit them via the chat function, which is at the bottom of the screen, or you can wave your hands via the invite participants button. I can unmute you and you can ask your question live. We'll also be having polling questions throughout the webinar where you can vote. Now, without further ado, I'd like to introduce our host, who is Gavin Collery, OAM. Gavin is a business communications professional with more than 40 years experience in corporate affairs, investor relations, communications and journalism, most of that within the resources sector. With professional services in companies like Interfield Resources, Western Mining Corporation and Elders Resources NZFP, Gavin is an experienced and outcomes-focused corporate affairs and investor relations professional. He has an exceptional and broad network that spans the corporate media, financial services and government spectrums, locally, nationally and internationally. Gavin is the founder of the steering committee of the highly regarded non-for-profit organisation, the Melbourne Mining Club. He is a recipient of the Order of Australia, OAM, for services to the mining industry. A warm welcome to you.
Well, thank you very much, Andrew, and welcome to our audience, and of course, welcome to our panelists. For today's show, we have a great lineup of guest panelists to discuss all things battery metals, why they're important to us, and how you can capitalise on some of the investment opportunities that are out there. Our guests today, of course, Michel Wrotniak. He's the investment manager at Orion Resource Partners. Mike is as I said, is an investment manager based at Orion's London office down there in Marylebone. He has experience in sourcing, evaluating and executing private equity transactions across the capital structure in the mining and the metals sector. Previously, Mike worked in Orion's New York office, overseeing the marketing and logistics of their refined metal and concentrate offtake contracts. And prior to Orion, Mike worked at Trafigura on their North American coal trading desk. Welcome, Mike, as the first of our panelists.
Thanks, Gavin.
Excellent, excellent. Our second panelist is Paola Rojas, who's the Managing Director of Synergy Resource Capital. Paola is a corporate advisor, investor, and a director focused on emerging resource and technology companies with untapped upside potential, and she's based in Sydney. Paola combines cross-border investments, exploration management, coaching and marketing expertise, mainly within Australia and the Americas. Now, prior to co-founding Synergy in 2014, she was a partner at Rojas and Asociados, a mining consulting firm in Argentina, and a director of multiple subsidiaries on the TSX, ASX, New York Stock Exchange and NASDAQ listed firms, including Silver Standard Resources, which is now SSR Mining, and Cliffs Natural Resources. Welcome, Paola.
Thank you, Gavin. Glad to be here.
Lovely to have you on board. The third of our panelists is Michel Labrousse. He's managing partner at Mazarin Capital. Michel is a principal, or Michel, sorry, is a principal and MD of Mazarin Capital based in Hong Kong. The company is acting with two LPs, one family office and the other a corporate, looking for investment in the natural resources space as well as in energy-related businesses. He was previously in charge of the financial markets and IB businesses at Natixis, in Asia, which ex-Japan, and directly in charge of the structuring teams for the various asset classes for both asset investor products as well as the liabilities, corporate business and teams. Welcome, Michel.
Thank you.
And welcome to all on that basis. Now, let's start with the first of our polling questions. Elaine, if you could help us on this, please.
Okay. I think.
There we are.
Oh, there we are. Is it up on the screen?
Yes, it is. It says, which battery metal are you most bullish about for 2022? Now, while our participants get active in joining us there, I thought I might ask our three speakers to let us know what they think there. Michael, we'll start with you. What do you think is your favourite there?
Yeah, thanks, Gavin. I have to say, I think nickel's my favorite. Forgetting all of the chaos on the LME a few weeks ago, I just think the fundamental demand profile is very, very strong. There aren't enough viable projects in the global pipeline to keep up with it. And if you look at, taking a step back, you look at a few of the majors on both sides of the industry. So you look at BHP, who's recently gone into Tanzania, invested in a very early stage asset, albeit a very high quality asset. And then you look at someone like Tesla, who's just signed an offtake with Talon in the US, again, a very high quality but early stage asset. I feel like the majors are starting to get a bit nervous, and that's a sign to me that nickel is my number one.
Lovely. Now, Paola, would you like to let us know your thoughts in that space, please?
Sure. As a basic concept, obviously all of these metals are going to be, of use. But in my personal opinion and our sort of thesis, we are, I would say, probably 70% lithium and 30% copper. And just because we've got, we think there's been a big disconnect between, the reality of the lithium market and what was becoming available. And that's kind of evident now, but it wasn't so clear, a few years ago when we started. So, and the other hand, or the other side, the copper fundamentals, copper is going to continue being the cornerstone of the electrification for the foreseeable future. So yeah, those two are our favorite.
Okay. And Michel, would you let us share with us your thoughts on this area?
Yes, I mean, I would favor copper for the next, let's say, year or so. I believe that copper has very wide applications, and clearly there may be a little bit of pullback, in the next few months. But then towards the end of the year, I believe copper will do very well. Lithium has surged, so much already, and nickel as well. We had this unfortunate situation with that Chinese short that I think, there'll be a bit of consolidation here. But, if I had to vote, and, it would be copper.
Okay. For my 10 cents worth as well, I'm very strong copper. Paola, when you said it's a cornerstone, it certainly is. And Michel, you said that for the next few years, I see it as drifting a little bit for the next year or so. But after that, just hang on to your seats. It's really going to, in my view, be more prominent than most people would imagine. But having said that, are we at that stage now that we can look at the poll results, please, Elaine? Should we do that?
Yeah, so hopefully the polling will show results are up on the screen.
Yep.
But it should show lithium has 40% of the votes, copper 28%, and nickel 25%, with cobalt and graphite trailing behind on 5% and 3% respectively.
Well, that's very, very interesting in that. I'm pleased to see that there's enough understanding out there for lithium to take the lead in that process. But we might just begin to ask some of our questions now. And Michel, I'm going to put the first one to you. And it's the reverse of what we've just looked at here. And it's, are there any of the battery metals out there that you're bearish about, and perhaps why?
Well, I mean, it's a difficult question at a time when we are in a bullish environment. So but if I had to make a choice, among those, I would say lithium in the short term, because it's risen so much, in the past few months. I mean, it was like $18,000 only, in September last year or August last year, and latest price I've seen was around $80,000, in yuan, but in the Chinese market a few days ago. So it's a 4 times rise, and at some point there may be a pullback. I understand that you have massive demand, but at some point, I believe there is also a risk of substitution, or people starting to think about how to make, batteries of another type. And lithium is made for batteries. I mean, copper, you can use it for tubes, for many different things, but lithium is really for batteries. So I think the substitution effect will take place at some point. I'm not, it may not be in 2022. I may be off by a few months, but I look at the number of different technologies in batteries world, which may come and at some point be a competition to lithium. And I know these are industrial metals, so the shift may take a lot of time, but there is a balance at some point.
Michel, that's very true. I was only reading a piece this morning that was beginning to talking about lithium-ion batteries, but in the midst of it all, it was starting to talk about the emergence or the emergence of sodium-ion batteries. So there's a few areas that we could look at there. Michael, I have a question for you.
Yep.
It goes back to our great friend Robert Friedland, who talks about the greening of the world economy. And I was wondering, what role do battery metals, as you see it, have to play as part of that greening of the world economy?
Yeah, excuse me. It's a great question. I think metals really has everything to do with Mr. Friedland's statement. I mean, I think when most people hear that phrase, they likely think of EVs, and you think of the typical metals associated there. So you're thinking about cobalt, lithium, etc. But really, there's so much more to maybe what we call here internally the energy transition. You're thinking about not just the EVs, but the source of electricity for those EVs and how that electricity and that energy is being generated. You have a whole other spectrum of metals out there that sometimes are forgotten about. You have rare earth minerals for wind turbines. You have silver for solar panels. You even have, platinum, iridium, ruthenium for the hydrogen economy, right? So these are all different areas of the mining space, of the metal space, that are all going to contribute to this greening of the world economy. So yeah, I guess in sum, I think it has everything to do with it, and I wish more people globally recognize that.
Yeah, that's fair enough. Fair enough. Paola, I thought what we do here is, given the discussion has been in that space, to just touch on lithium for a moment and ask you, where do you see the best opportunities lying? Is it a ratio of geology versus geography? Is it hard rock versus brine? What's your view there as to where the opportunities would lie in the lithium space?
So we in general, we think that is wise to have a combination of not only types of deposit with the associated production methods that come with them, and the jurisdictions, because of political risk on one side, but also supply chain restrictions. So we really feel that it makes very good sense today to have exposure to more than one type and to more than one jurisdiction. And in terms of where we see more or less opportunity in those sort of, if we put them in two axes, we do appreciate or enjoy more working with brine, just because we've done more work in that space. But the opportunities that are coming to hard rock are very, very impressive as well. So, you know, for us, the Americas is with obviously the lithium triangle, for Brian being a big player, having, you know, a large, I think it's over 50% of the global resources there. But also Australia. For us, that's kind of a larger triangle, if you can call it that. And in terms of other sort of types, because there are other types, so we're keeping an eye on you know, sedimentary, which includes both clays and evaporites. So that's kind of a smaller percentage, and it's very new. It's not so proven, but we're keeping an eye on that as well.
Okay. Paola's in Sydney, ladies and gentlemen, and I'm in Melbourne. So I'm going to ask her a bit of an Australian question here in that sense. I was looking at a piece, Ken Brinston, who's the boss of Pilbara Minerals. He spoke a few days ago and he said that there's a lagging investment in new supply, and that it's the lithium miners who'll be winning the day with the EV boom. And he says for a long time to come. So it's about lagging investment in new supply of lithium. Is he right?
Definitely right. You know, we've seen I mean, you get a bit distracted because now, you know, the price has gone, you know, incredibly high, but you're forgetting that we've been coming off from, you know, a couple of years that were completely different. And I think in my view, a big, this is my impression, and you know, I don't have all the data to back it up, but I have the impression that when the LME brought this futures contract, I think that really allowed the opportunity for a lot of institutional big players to sort of participate in this space and start putting some more capital. But this was just last year, so it's very recent. And you know, the companies that started operating or trying to find a project and started to work on them in 2015, 2016, you know, had to go through many rounds of financing, and where the people putting capital at risk were not the biggest player, because they just stayed away because, oh, we can't hedge a risk with this. So I think he's completely right. And things have started to change, and I think the price is partly a reflection of that. Obviously not all, but I think there's a portion, and I think there's gonna, as he says, it's gonna be for a long term for us. Obviously, this is our opinions, you know, and analyzing is our best guess. That's what the only thing we can do, because no one knows for sure, but that's what we think.
Yeah, I can see your point there. I might ask our two other panelists to join Paola, and any of you have a look at this question. It's a follow-up to that, really. Brinston, when he did speak, he also spoke on the supply side, and he very bravely, very boldly said, our car makers are asleep at the wheel in respect of supply side in planning lithium production for batteries inside the EV transition. Would any of you have a view on that? Are they in fact asleep at the wheel, or we here down in isolated Australia not seeing the big picture?
Well, I think, you know, the major car makers are down to being just a conceptual factory, and then they have assembly lines, but everything else is manufactured by OEM manufacturers. So, you know, they've lost touch with actually, and their relationship with the OEMs is so much of a bossy relationship. Like they're asking, you know, the prices to become, you know, almost negative on some parts. So it becomes in such a chain of conception, which basically they have not been able to anticipate the need, you know, for the actual raw materials, and they let that to the OEM manufacturers, who in turn are basically people who are manufacturing zinc at the cheapest cost. So they don't have any vision. And it's the same for any of those materials. I mean, and surprisingly, in some aerospace industry, the same as well, for certain rare metals which are needed for the planes and missiles, etc. And those guys don't want to invest when those metals can be procured very cheaply if they invest early on. So
Mike,
it's the same.
Yep. Sorry, Michel. Mike, did you want to add something there?
Yeah, excuse me. Sure. I would agree with that statement broadly. I think, again, I mentioned Tesla earlier. I think they might be the one exception here. They are a bit more dynamic, I think, than some of the rest, at least from the American brands, let's say. You did see Tesla just go out and sign an offtake with Talon Metals for nickel. Tesla has invested in lithium brines in Nevada. So I think they're doing some work to help prepare them for the future. Enough work, I don't know, but they're certainly doing more than the other large automakers in my mind.
Yeah, well, I noticed in the last few days that Tesla's just opened its gigafactory near Berlin to make EVs. And along the way, they just casually reminded us that right now, about 14% of all new car sales in Germany are EVs. So that's interesting. For the participants there, I thought I'd just share a couple. We're still saying on lithium. I thought I'd just share a couple of latest information to give us more perspective. That the global EV fleet size is projected to lift 30% a year through to 2025. And the global wind capacity is projected to lift 6% a year through to 2025. And the global stationary battery storage is projected to lift 8% a year through to 2025. Now, clearly, we need batteries, we need mineral supply, and we need improved battery performance. To our panel, does this keep you awake at night? Mike?
I wouldn't say it keeps me awake at night, but I would say that I think the biggest risk to the energy transition is the raw material side. It's the upstream. There's not enough minerals to go around for the projections here, clearly. There was just a really good article in The Economist this weekend that sort of highlighted this exact very thing. It's just not there. It doesn't exist. The investment isn't there. And so, again, I would necessarily say it keeps me up at night, but it is the biggest risk to this sort of global thematic that we're seeing at the moment.
Well, that's true, Mike, and I've never read a bad article in The Economist. It's probably the best you can get out there.
I've read a few.
Have you? Paola, Michel, did you want to add anything to that?
Yeah, in my case, I think despite the potential troubles that this can generate, I do find it exciting in the sense that this is sort of triggering a lot of things that took forever, in my view, at least. It feels like now everybody wants to be, invested in some part of the, the electrification chain. So it's become mainstream, where before, let's say 2 or 3 years before, and even more, it was such a sort of isolated bubble that you didn't hear your friend who works in whatever sector talk about it, or having bought some shares about it. And now that's actually happening. So I find it exciting, not because of the supply that we're gonna not have, obviously, and Mike is completely right. But I find exciting that part. So this is gonna be an opening for a lot more people that are wanting to invest in these things and actually following through.
Okay. Well, unless you've got something to add, Michel, I might ask another question there. And again, it's open to all the panel there. What innovations are we seeing in lithium-ion battery production and, importantly, performance?
Well, I just want to add on the last
Sorry, Michel.
topic. No, it's okay. I believe that going forward, the electrification or decarbonization of the industry is going to have a massive cost. And these costs are going to run ahead of themselves, and it's going to create a lot of inflation on top of the monetary policy, which has been the major driver of inflation. So going forward, if you want to be protected from inflation, that's the sector where you should be invested. And because it's going to benefit naturally from these two phenomena at the same time. Now, to go back to your second question about innovation, I'm not the most technical guy on innovation, but I believe that there will be a lot of substitution effect, as we ride the curve of electrification, and people are, and for example, let's take the example of certain type for the larger batteries. You have new batteries that can, for example, there is a company called MB, or I forgot their name. There's the gentleman in charge is the Professor Donald Sadoway, and he has developed a type of battery based on antimony, which can have 10 times the number of cycles of the typical battery. So this changes typically the life of a particular battery, hence the cost of operation goes down significantly. So this type of major changes in the technology may create disruptions and shift of attention from one metal to another. So I think in the next 10-15 years, because it's a 10-15 years journey, we have ahead of us a number of disruptions which we can't really comprehend at the moment, because they will depend on the price point of each of the raw material at that given time. Mm-hmm. So brace yourself for surprises.
Innovation. Paola?
Hey, Gavin, we've got a few questions from the audience. Do you want me to?
Yeah, we'll go to that in 1 sec. I'll just see whether Michel whether Paola or Mike wanted to add anything to innovation.
Okay. I think the what was Michel was talking about the minute, and he touched on before. If the most basic sort of sense, if you have one item that goes massively, insane in price, people are going to have a very high incentive to find an alternative. So you're seeing chemistries in the batteries being changed, and you see vanadium, and you see more nickel. Like they're trying to come up with a different option. Mm-hmm. But what I don't see is that having a very fast effect. Like I think any new variation is gonna take some time, and it's not gonna be a year or two. It's gonna be 5 years. But if the prices remain at this level, that's, it's going to be a risk, and it will happen eventually.
Okay. Mike, did you want to add something there?
Not much more to say there. I think they sort of nailed it. Again, I focus mostly on the upstream, so I might not be the best person to answer this, but I would agree that, there is certainly substitution risk here. And I think, Paola, you mentioned vanadium, and we're seeing vanadium redox flow batteries becoming more and more prominent throughout the energy supply chain and energy storage chain, I should say. So that's probably, where I'd leave it there.
Okay. Now, Mike, you're not going to get off easily, because in a moment I'm going to come back and change the subject from lithium to copper. But before we go there, Andrew, have you got any interesting questions you'd like to put to our panel?
Yeah, I've got a few comments from the floor. So yes, the first comment on the floor was Mark Turner mentions he's invested recently in black mass recycling. I wasn't sure if that was something that any of the panelists had actually looked at or had an opinion on.
I think that I don't know the technicals of black mass recycling. I know the concept. I think it's very interesting. It's a new technology. As we mentioned earlier, I think there is, from a resource perspective, an extractive resource perspective, there's a shortage of a lot of these metals, and one very intuitive and ESG friendly way of filling it is through recycling. One of which is black mass technologies. I think there's a company based out of the US called Li-Cycle that are pioneering a lot of this stuff. It's a private company, or nope, it's SPACed. It's now a public company. I think they probably have some good technical insights on their website there, but certainly a very intriguing space.
Okay, does that help? Anything else, Andrew, you'd like to?
Yeah, I think there's a gentleman from the audience called by the name of Abdul Khan who wants to ask a question. So I'm just trying to see if I can just actually allow him and just sort of mute him so he can ask his question live. Oh, he seems to have disappeared from the chat box. I may have to just come back to you on that. Do you want to go into the next question, Gavin?
Yeah, we'll do. Okay. I thought we'd move here from lithium to copper, Dr. Copper. And Mike, I'll leave it with you to touch on this. Can you talk about the supply-demand fundamentals of copper? A simple, straightforward question, but a very important topic.
Very important topic. I think I really liked, as you also highlighted, Gavin and Paola, saying it's sort of the cornerstone of this battery metal thematic. I think I saw Goldman recently wrote that copper is the new oil. It's the new sort of sexy metal or sexy resource out there. No surprise, as a firm, we're incredibly bullish copper. The way we see it, we're relatively balanced this year and the first part of next year. And after that, I think the sky's the limit. I mean, there's tons of varying reports out there. I've seen something that says that we're going to increase demand 1 million tons a year, for the next 30 years. I've seen doubling through 2050. I've seen, some of the Cruise and Woodmacs of the world say we're going to be in a $10 million ton deficit by 2025. So I think the scales are all weighted in that direction. I just don't see supply keeping up. Projects are getting more and more difficult to build. The price is going to have to react to incentivize financiers and just incentivize mining companies to invest that money. It gets more and more tricky with the escalation and inflation that we're seeing run rampant through the industry. And then, to add one more thing on the supply side, the woes there, you have some of the traditional jurisdictions of copper production, like Chile, for example. There's, 5 years ago, Orion, we'd have no issue going to Chile. We still wouldn't have any issue going to Chile, but you look twice now, given what's going on with the current administration. So I think that's going to add a bit of upside pressure as well, and certainly restrict some investment going into the country, which will, restrict copper production from meeting the demand.
Yeah, I have a good friend of mine, Professor Richard Shoddy, mineral economist, and he's done the homework on this, and he says to take a medium-sized to large copper deposit into first production in the modern era now is no less than 18 years. So if you haven't got copper production well down the track at the moment, as Robert Friedland said at BMO recently, he is genuinely scared to death as to how we as an industry are going to be able to provide the copper that's needed in that space. So,
I wasn't there, Gavin, but just to add to that, I heard someone tell me at the FT conference last week or 2 weeks ago, Robert Friedland said, you're going to need a telescope to see the copper price in 2 years.
You'd say that too, as only Robert would. I was going to look at either Paola or Michel. As an investor, what attracts you or not, and I think it's what attracts you to copper, and what role does it play in your portfolio? We're talking short-term, long-term, early stage, whatever. What attracts you to copper, and what role does it play in your portfolios? Michel,
well, yeah, copper is definitely very important going forward because of all the application, and not only for electrification, for tubing, for et cetera, So as the world is growing, population is urbanizing, you need more and more copper. So, this is, and also this is the big market, cobalt is important, etc. But these are small markets versus copper, which is massive. So clearly there will be a shortage in the supply. There will be ways to recycle old copper, and that is going to become a profitable industry. It has already started and is going to grow. So, but clearly there is a need going forward. So copper has to be central to, I think, to any portfolio. And looking at the monetary policies and the inflation going forward, and the way the US dollar status has been threatened or diminished to some extent by a number of political issues, plus the monetary policy of the last few years, I think people are going to shift money out of US dollar into other reserve of value. Of course, you have the crypto, blah, 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 but that is tiny. And if you lose your phone, you lose the whole thing. But, copper is one way. If you have massive amount of money, if you have a big investor, you can put money in copper. You can finance copper, and you're not going to lose.
Okay.
So,
Paola, have you got a view there?
Yeah, so we've been working, so I tend to say this as a joke, but it's kind of true. So I'm actually fourth generation in my family that has, working in the mining sector. And I say that I have copper running through my veins, which is obviously not something that you want. But as a metaphor, I think it proves to me, or it shows me that I'm so connected to this element that is central, as we said. We need it. We haven't been investing nearly what's necessary, and we're talking massive deposits. So to find a copper deposit, if you compare a copper deposit and a gold deposit, they're nothing like it, in the amount of money, the amount of capital that you need to find one. So and then you need to build it, and that's another, a massive difference between them. So it's the order of magnitude is completely different. So we're talking about, finding a porphyry in the Andes, which, is where so many of them are, and you need to put, several billion to try and get a mine where you can build a gold mine with 20, 50, 100. So it's completely different in scale. And because we haven't been investing as a world, as a planet, we haven't been investing enough in finding these deposits. We have the lack of investment, and then we have the lack or the lag in terms of when those deposits are going to be ready. So I remember from even when I was, a kid, my dad used to manage a deposit that was in Argentina, and it's now owned by, I think it's Yamanas now. And that is like, the deposit is there, but it hasn't been put into production because of the problems in Argentina and the ticket. Like, to build that project is, I think it was, I can't remember exactly now, but it was a massive amount of investment. So we need to really have, first, as Michel said, you need to have it in your portfolio. Second, as companies, you need to invest more in exploring for copper via the majors, via joint venture agreements or funding agreements where you fund juniors to do it. And we're gonna need to build more of these, deposits. So I think there's an opportunity for sort of the wider market to participate more in this space. Maybe now it's gonna be easier because of the electrification and all of these things that we've been talking about, because it's needed. It's urgently needed.
Okay. I just want to tease out a little bit more something that Michel raised a moment ago. It's recycling. Before we started this session, for the sake of the participants, the panelists, we were having a chat, and I mentioned to them that as the Melbourne Mining Club last week, we had Amar Al-Jundi in Melbourne. He's the CEO of the Canadian gold miner, the third or fourth largest gold miner in the world, Agnico Eagle. And he said to recycle, the need to recycle base metals will grow globally and significantly. And he specifically cited copper. To the panel, what's your outlook for copper recycling? What is the role of recycling in battery production? I think I know the second part, but your outlook for copper recycling, is it steady as she goes, or are we going to desperately climb into that space? Any of the panelists, please.
Well, in a few words on the recycling part, it's taking place already. A lot of people are dealing in scrap copper. This is a very specialized market that goes into containers, which are expensive to move. But it's also, you have a lot of, it's not a very homogeneous market. A lot goes to China, and it's being recycled in China. So this is the Chinese have their hands on this business for sure. So at some point, it would be good for, let's say, other parts of the world to wake up and try to follow in the Chinese leadership in order to recycle copper intelligently. And there are ways to smelt copper intelligently without, harming the environment. So it's somewhere where our Chinese friends have taken a lead, definitely. Mm-hmm. And
which is actually quite interesting there, because I would agree with you completely. And there's nothing new about the copper scrap industry. But in North America and in Europe, the infrastructure is much older than it is in many parts of China. And so it's really interesting that the Chinese have done such a better job of recycling and utilizing their scrap industries than we have on this side of the world. Given that we have older infrastructure, which is ripe for recycling and reinvestment.
Okay, we're going to move to nickel in a moment, but before we go to nickel, Andrew, are there any other questions that you wanted to raise from our participants?
I think there was an earlier comment that I just want to sort of go back to, that was posted by Greg Lowe, which is, I think, a comment more to do with kind of battery metals companies in general. And Greg says, personally, my biggest concern on the demand side is the actual share prices of many companies. So many have exploded to market caps of 200 million, and was wondering whether they're ahead of themselves. And I think that ties into a conversation I was having with Bert Koth yesterday, when he was saying he's looked at a lot of these battery metal exploration companies with market caps of around 200 to 300 million. And he was saying, I think that 80% of those won't necessarily go from exploration to production. So I think combining Greg Lowe's comment with Bert Koth's sort of thoughts, I was wondering whether any of our panelists had any thoughts on that.
Panel?
Yeah, I want to be careful with this response. Maybe why everyone stayed quiet. Yeah, are there some companies in the junior space that are overvalued? Absolutely. Are there some that are valued appropriately? Yes. I think maybe some of the ones that are overvalued, the investors are specifically looking for an M&A or a takeout type situation. So, without looking at a specific company, it's hard to comment as a whole, but that's typically how I would see it.
What I would say is I tend to chase more the undervalued ones. So I don't really pay that much attention to, the ones that are like at one point when they're just, unless they're in your portfolio, obviously, but if they've gone off and they're, above a certain threshold, it's like, well, the opportunity for a group that does try to play with the arbitrage opportunity of knowing what's there and thinking that the value that the market is putting on it is not appropriate, then yeah. So I do see so much opportunity. So yeah.
Okay, thank you for that. We might move on because time's getting towards us on this. Michel, I was going to ask you to perhaps help us pay some attention at the moment to nickel. We saw the impact of the invasion of Ukraine on the price of nickel only a few weeks ago. What's your outlook on nickel and why?
Well, we saw the impact of the invasion of Ukraine on many things. So nickel is one yes. specific, but again, nickel, it's not a big market like copper. to the same extent. And also at the same time, it's driven a lot by ferronickel, which is the alloy that it's used in many parts of the industry. So it's not specifically a battery metal in its own right. So now we look at what happened. Nickel has been clearly there was a short in the market created by one company which has a massive plant in Indonesia, which believed that they could control the market. And it reminds me of what the Hunt brothers were doing in the 80s in the US with silver, and they got it wrong, and unfortunately there was a bit of excitement here, and which has largely being resolved to some extent. So the no risk nickel is clearly a large producer, but I think they are number 5, among the nickel producer. So they are not the biggest in the world. Yes, this is, this has an impact. Yes, clearly, this is an important factor, and people are going to be worried about supply chains, etc. But in the end, the nickel market is bigger than Russia. So now, of course, you have a number of I suspect you have in a war you use equipment or you blow equipment which has some nickel content, but that's not going to make a huge difference in the whole balance. This is clearly a metal again. The main producers are in the raw material is Philippines, Indonesia, and apart from a geopolitical point of view, that they are physically quite close to China, nickel is still going to be produced, and this will normalize, I believe, over the next few months.
Perhaps to Paola or Mike, building out of that, what we're seeing here with the conflict that's there is certainly supply chain disruption that we need to factor in, particularly in the area of battery metals supply chains. Would either of you care to comment on the issue of supply chain disruption that we're often thinking about at the moment?
I think in general, you can sort of conceptually apply a similar concept. If you start getting sustained issues, like if this conflict continues for some time, the companies may sort of expand on the work of replacing, not all obviously, but use chemistries that use less nickel. That could be something that could happen. I don't know if people are actively seeking that now, but it could. But it's hard to predict. I don't really have any further concept or anything to add aside from that. I think it's an issue that we're gonna have to struggle with, and it's gonna continue pushing deadlines, in the future. So I don't see a quick solution.
Mike Wrotniak, do you have something to add?
Yeah, I think from a supply chain perspective, I think you're going to see, you've seen it already from some governments, but there's going to be an increase in sort of incentives that, governments are going to provide domestically to help, bolster, if you're so lucky to have the resources, their domestic production of it. Beyond that, I think you're going to have a lot of companies looking much closer at the counterparty risk of the people they're doing business with. That's going to limit some parties that companies are willing to do business with, which to an extent may lead to a bit of a bifurcation in the market, in the sense that some counterparts will achieve a premium, some will receive a discount. Who knows? It's a bit speculative, but it's a really interesting question.
It is too. What we're going to do now is perhaps move to the last two of those the battery metals that we spoke about, in cobalt and graphite. Paola, in moving to cobalt, most of the world's cobalt comes from the DRC. How can we invest ethically in cobalt?
it's a hard one. You know, it's been something that we've been talking about for you know, I mean, personally, I remember trying to get into cobalt in Chile or in other sort of new places, and we have seen a lot of exploration here, a lot of exploration in Australia and in Canada, and a lot new exploration in the US. So I think it's promising. There's you know, a few new things coming online, like Electra. They used to be called First Cobalt. Electra Minerals, I think, is the new or Electra Battery Exchange. Or they have sort of like sort of a concentrated point where they're going to process cobalt, and they're going to do a few other things and produce concentrate, I think. But I think the main thing that we've seen in cobalt is the price has been moving sideways for so long after that spike in, was it 2017, I think it was. And then it moved sideways for so long that companies wanted to do a lot more, but ended up not being able to do much, and it didn't, the sector didn't take off like we expected it to take off. Now, obviously, the price has recovered, so that's promising, and we are starting to be seeing, you know, at the end of this year, some new production. So that's again a good sign. But there's a lot more work to be done. I think Australia could play, you know, much bigger.
Oh, sure
role.
could. Sure could.
Yeah, so I think there's a lot more that needs to be done. But it happens similar with uranium. You know, when the price is still so low, how do you incentivize companies and investors to put money in these sort of less loved commodities? So yeah, it's, I think, and because the source, going back to your question, and sorry, I got distracted, but going back to your question, it's not that the DRC is doing, you know, all of it. Like, they have the estimates that I've read is something like 15 to 20% of their production is sort of, let's call it questionable, with, you know, with air quotes, because there's some issues about where it's coming from, if there's child labor or you know, all these other issues. And if you have some cobalt coming from Australia or Canada or you know, the US, we're going to have a bit more control on that source. So I think it's really important for that the ESG sort of investor
look for diversity, look for opportunity. That's what we're looking. Before we leave Cobalt, Mike or Michel, do you have anything that you'd like to add on Cobalt?
Yeah, just the fact that cobalt is so easy to concentrate from, you know, what it is in the ground to 3%, where it's marketable in DRC, that it's so, you know, so simple that you have human labor largely employed. Unfortunately, you know, this is not controlled. This is why you have all these issues about, you know, ethical cobalt, blah, blah, blah. If cobalt was like gold, you know, deep in the rock, and you need chemicals to extract it, you wouldn't have that issue. So unfortunately, by nature of cobalt, these issues will always be floating around in Africa and won't happen in the rest of the world. The problem is that the cobalt is in Africa. So, you know, it's unescapable. Unfortunately, we just have to make sure people are properly registered and over the age of 18 or, you know, whatever.
Okay. Mike, if I could please, I'll move to graphite here. Can you perhaps just help us touch upon the supply-demand fundamentals of graphite, and is the technology of graphite integration especially up for it?
Yeah, so it's funny. I was actually quite sad when I saw the results of the poll earlier, because I really like the outlook of graphite, and I think that that metal only got 3% in in the poll there. I think it's certainly been one of the laggards in this energy transition, excuse me. Market seems to start to be waking up a little bit. If you look at the actual makeup of the majority of lithium ion batteries, graphite is something like 45–50% of them. So if you believe in EVs, if you believe in lithium ion batteries, you sort of have to believe in graphite, at least at, you know, this generation of battery technologies. I think the demand, it's really a demand story. The demand is very robust. You know, I was reading some consultant reports recently, you know, saying that we're gonna have a 400,000 ton deficit of battery grade graphite by 2026. And that doesn't sound like a lot, but it's over 10% of the market, or projected market at that point in time. You know, I've also seen other estimates saying that the demand for battery grade graphite is going to increase by 400% through 2030, which if you look at it on a sort of relative basis, that actually would be the most rapidly increasing battery metal out there. Now, whether you believe that or not, I don't know. I think that's probably a bit overblown, but you know, where there's smoke, there's fire. And I think it's certainly coming with graphite.
Okay.
I just on the supply side, very quickly, in the technology, there are certainly a number of graphite projects out there. There's a lot of graphite production, but the technology, I think you've nailed it, is really very tricky. The battery grade processing is not easy, and it's going to be tough for a number of junior miners to get it right. They will get it right, but it will be some trial and error. And on top of that, the qualification process for the offtake with OEMs is very, very stringent. So, you know, as this supply crunch comes, I reckon we'll start to see a lot of the OEMs actually reduce their standards and their qualification process on the offtakes. They're going to have to.
Watch this space. Before we hand back to Andrew, I've got one question from left field, and it's good old-fashioned zinc has just hit new highs. Surely it's part of the future energy storage systems. It's part of the green energy system. What do any of you have to say? And just one of you, if it could, fit in, how does zinc fit into the battery metal story? Go on, Mike, go for it.
I don't know how it fits into the battery metal story, but if you think about zinc inherently, it makes steel last longer. So surely it's ESG friendly, right?
Yeah, that's true. That's true.
Paola,
did you want to add something?
Yeah, it was included. I have a frequent conversations with a company, a TSXV company that is focused on zinc, and the CEO was really happy when it got included in this new sort of now I'm blanking on the name of the so is, you know, that you have the FANG, and now you had the MF minerals for metals for future technologies. Yep. Something like that. So it was included there, and I think it was for the zinc explorers especially, and the producers. It's a little bit of a recognition because they kind of feel like they're left out, like the poor cousin. No, that they're poor.
And that's why I raised it, because it's at record highs at the moment. Look, yeah. Time is taking us away very quickly. And we do have a second polling question. Andrew and Elaine, would you perhaps like to pop that up for us?
Yeah, and the second polling question should just be coming up now is, do you own an electric car?
Okay, Michel, come clean. Yeah. No. Mike?
I don't, but I don't own a car, so...
You own an electric bike.
If I owned a car, I would buy an EV, I promise.
Yeah, I don't, but I do have the decision that my next car, like my car is still new, so I can't, justify it. But I do have the decision that the next one is going to be EV.
I'm the same. That in fact bought I received my new car 6 weeks ago, having ordered it in March last year. But the decision that my wife and myself have made is that we've bought this new car, or we've both got new cars, but we'll in 5 years' time we'll move to one car, which will be an electric vehicle. makes a lot of sense in that space. So I think we can see the polling there, Andrew. It just says, at this time, no. You
Yeah.
happy with that? Now, we can see that the audience has been voting there on that. I'd like to wrap this up now. I'd like to thank our guest panelists today in Michael Wrotniak, Investment Manager of Orion Resource Partners, Paola Rojas, Managing Director of Synergy Resource Capital, and Michel Labrousse, Managing Partner of Mazarin Capital. For those of you who are interested out there, Beacon Events has a series of events coming up, and hopefully that's going to come up on the screen. There it is. We've got those. I'm going to say in a moment that we hope to see some of these events. And before I say farewell, Andrew, is there anything else you would like to add?
Well, I think I'd just like to thank you for being such an excellent host, Gavin. It's always a pleasure to have the support of you and the Melbourne Mining Club.
Always a pleasure, always a pleasure. And again, thanks to our panelists there. We hope to see you at some of those events that were up there. Until then, to all participants and panelists, stay well and stay safe. Thank you very much.
Thank you to
Thank
Minds
you.
and Money.
Thanks, Gavin.
Bye-bye.
Thank you, everyone. Thanks, Andrew.
Bye-bye.
Cheers.